The Philippine Stock Exchange on April 16th is effectively paralyzed. Institutional volume is flat, and the retail market is stationary. The exact scale of the stagnation is right here on the terminal. The index moved a single basis point, positive 0.01%, holding the line at 6,063.69. Identify this protocol as the dividend capture and rotate maneuver. In a market this quiet, a disciplined operator can surgically extract yields without the noise of price volatility. The flatline provides the necessary cover for a clean extraction. Phase 1 is a passive siphon of institutional capital. The operator is opening the ledgers to document the first stage of the payout. This FirstMetroSec notice confirms the first major extraction, a 2,763 peso dividend payment from the PLUS position. A secondary extraction occurred simultaneously in the DragonFi account. This notice shows a smaller 165 peso dividend from that same asset. The final strike of the siphon was the PCOR dividend. This FirstMetroSec notice details a 675 peso cash payment credited directly to the account. By holding the line on these specific assets across their X dates, the operator materialized over 3,500 pesos in pure liquid cash out of thin air. But the PCOR holding was a technical play. It was never intended to be a long-term part of the portfolio. It was a container for the dividend. The 5,000 shares of PCOR were held only long enough to cross the ex-dividend date, the threshold required to secure the payout. This chart explains the mechanics of a dividend capture. You enter the position right before the X date, capture the cash payout, and then immediately discard the underlying stock once the obligation is met. The sell-off was immediate. The operator unloaded the entire 5,000-share PCOR block at exactly 3 pesos and 10 cents. By severing the position mechanically, the operator pocketed the extracted cash and immediately removed their exposure to the stock's future volatility. In Phase 3, that liquid capital is weaponized. It isn't left idle in the account, it is immediately redeployed. The operator rotates the extracted yield into a defensive shield, using the cash to purchase the utility fortress, TEL. They accumulated 10 shares of TEL at precisely 1,269 pesos. This completes the maneuver. The operator used a temporary short-term yield capture to fund and expand 1,896 pesos. The operator refuses to panic buy, protecting the cash line while the market bleeds. That concludes the intelligence briefing on the current portfolio posture. The operator is now fortified. They are holding over 86,000 in dry powder, waiting in silence for the next market bottom.